Hello. Welcome to In 180 Seconds. Before we learn about ETF, let us understand something more important. The Sensex holds India's top 30 stocks and Nifty holds India's top 50 stocks. As of today, the Sensex is around 50,500 points. And Nifty is at around 15,200 points. Let us quickly look at these 30 stocks represented by the Sensex. These 30 companies have a weightage and tracked under Sensex. These weightage change over time based on the individual stock's performance. Also, if one of these companies goes bad, then the particular stock could be removed and another stock could be included in Sensex. But remember, the removed stock from Sensex is still available for trading, but just that the broader Sensex does not represent this stock anymore. Alright, time to see what is in Nifty 50 stocks. As you can see, the NSE Market Exchange tracks 50 stocks under Nifty, and has a weightage for each of them. You might have noticed a lot of overlap between Sensex and Nifty stocks. Okay. So here is the question. How about the idea of buying an index like BSE Sensex or NSE Nifty? Can someone buy an index? Sounds weird, is it? Not really. The answer is kind of possible. If you buy the underlying stocks of Sensex or Nifty, in the same ratio that it is being represented, does that mean we have a portfolio same as these indexes? Yes, that's right. We can do that. However, you need to remember that you would need to keep a close eye on the Sensex and Nifty to adjust your portfolio. I mean, if the weightage of these stocks change or if one stock is removed and a new stock is added to the index, then you would also need to do the same at around the same time. That might sound little complicated, right? Is there a better way we can do this? Yes, we can. And the answer to that is ETF, exchange traded funds. A ETF generally tracks an index like Sensex or Nifty 100 or even gold. They are passively maintained compared to mutual funds. Their sole purpose is to keep track of the index it is supposed to follow and maintain the stocks in its portfolio with the exact same weightage as the index. So let's take the example of HDFC Sensex ETF. This ETF tracks the BSE top 30 stocks in its portfolio and maintains the same weightage as that of the Sensex. If a stock is added or removed from Sensex, the ETF fund manager does the same to HDFC Sensex ETF fund immediately. Thus the ETF will give returns in line with Sensex. A ETF, as the name suggests, is a fund that is exchanged or traded during the market hours. Which means, we can buy and sell the ETF like a stock between market hours. Here are some of the famous ETFs that you could consider investing if you are interested. Now, one last thing before you leave. If you are not aware yet, here is a ETF through which you could invest in the top American stocks like Apple, Google, Facebook, Microsoft, Amazon, Tesla, etc. The name of the fund is N100. It is currently trading at ₹950 and is one of the easiest way for you to consider in order to diversify your portfolio. Alright. Thanks for watching. Goodbye.